In my opinion, I think gold is something of a confused market at the moment. On the one hand, we go back to 2018. We've got this longer term uptrend, which saw fresh all-time highs hit just in the summer of 2020. On the other hand, since those all-time highs, it's not come anywhere near to threatening them. And we've seen the market just continue to slide lower. And if you look at the last couple of months, it's just a sideways market. So just which way is the next major move for gold, and what's the opportunity down at these levels? I've not enjoyed trading gold the last few weeks, last few months. I think there'd be much better markets out there, but I do think it's interesting again down here. End of November last year, the price slipped down to 1763, bounced up to 1960. So we all saw a couple of $100 move off this level, and we're here again. We're traded down to 1760 over the last week. So I do think it's bounce or bust time. I do think there's an opportunity down here if we're trading gold. The question is, do we buy for the bounce, or do we assume, well, this market is so weak, 1760 is going to go and the price is going to plummet? We do have a couple of trades going on gold at the moment. We're losing overall the other week on the live stream. I think we did a trade there. The better market this month, I've said it a few times, has been crude oil. And again, that's proved to be the case this week from the video we did earlier this week. But I do want to get another trade on for gold. So I'll talk about what's been going on with it the last few weeks, why I think there is a contrarian trade to do. Then we'll come back and look at it in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on what's been going on with gold. So as usual in this video, we'll talk a bit about what's been happening the last few weeks or so, look at the big levels to watch, then jump back onto the platform and do a trade. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, we now do these regular live streams every Friday at 2:30 UK time in the afternoon. So if you're subscribed with the alarm bell clicked, you get a notification every time we're about to go live. Right, let's get into gold. I think I should start off by saying, I've mentioned it a few times on the live streams we do. I think this is a really boring market the last few months. It does feel that a lot of the hot action has moved to other markets. We've seen some great gains in the likes of copper and platinum, palladium started moving a bit over the last week or so. And I found it quite a boring market, to be perfectly honest, the price of gold. Maybe it's about to change. It is interesting down at these levels. And I think there is actually an aggressive trade to do. So let's hope we have perhaps a bit more interesting and volatile moves in the weeks ahead. But I think one of the reasons we've seen nerves calmed, really, and people perhaps look for riskier assets than gold, is the impact that the various vaccines are expected to have. It's been a few months since the coronavirus vaccines were announced. There is a hope that we're going to see some sort of return back to near normal. We've seen stock markets still strong, a bit volatile this week, but yet again in February, US stock markets hitting fresh all-time highs. And I think that's another reason why we've seen people turn away from gold. We had seen during February, the recovery of the US dollar has stalled. So we've seen plenty of markets gain against the US dollar. But interestingly, gold is not one of them. So even though we've had a falling US dollar, and we've seen strength in the likes of the euro, strength in the likes of the pound, particularly against the dollar, we're not seeing the same sort of strength for gold. So even a weaker US dollar hasn't managed to lift the gold price during February. One of the environments that gold does well in is inflation. When we have inflation concerns, the cost of living rising is something that can help the price of gold because it's seen as a hedge against inflation. We don't even have that at the moment. There's a fairly calm outlook for inflation over the next year, next couple of years. There was some commentary this week about inflation perhaps being only around 2.2% over the next 10 years. I think it's maybe a bit too ambitious to forecast 10 years out for something like inflation, but that sort of backdrop as well doesn't help gold. One way that investors get exposure to gold is using popular ETFs, such as the Spider Gold ETF. I know there's always loads of discussion whenever we talk about ETFs for silver or gold. Occasionally people are very passionate about holding physical gold rather than holding paper or electronic gold. Personally, I don't care. If I've bought it, it's much easier for me to buy it and trade it as a CFD or an ETF than actually buy physical gold. But whatever you prefer. Either way, we've seen a lot of outflows from ETFs, these exchange traded funds. So again, investors perhaps deserting gold, paper gold, to go and put their money in paper, something else. So that's been fairly bearish, I think, in recent weeks. So all of this is fairly negative for gold, but is this the time we do a contrarian trade? Is it exactly when everybody thinks the hot money has gone somewhere else that now is the time to get involved? And I think from a technical point of view, it's definitely really interesting down here. So I am going to do a trade down here on gold, a bit more of an aggressive trade than usual. Let's talk about the levels to watch, then we'll get on and place the trade. So I think the most immediate hurdle on the upside, highs from earlier in February, around about $1,855. Not much conviction at the moment. When gold rallies up to 1,800, it gets slammed back down pretty quickly, or it has been at least. Lots of support on the downside as well. Really big level, 1760. For me, this is bounce or bust level for gold. I think it's going to be really pivotal in the next week or so. To find out why, let's take a look at this market in a bit more detail. Let's look at the chart of gold and set up a contrarian trade for the price of gold. So as it's a gold video, we start as usual with the big trend. Big trend is up. August 2018, off the lows around about 1150. The price accelerated from the March lows this year, all-time highs in the summer. And since then, it's just been drifting. So let's jump in and look at what's been going on since August. So this was the correction. And I did get wrong footage. In January this year, I thought we were breaking out and we were going to see it establish a recovery back up towards those all-time highs above $2,000. It hasn't been the case. And so I suppose you could say we're still in a downtrend. Off those highs, off those August highs, we've only got a couple of touches on that trend line, so not really valid so far. But I'm a big fan of looking at big levels in the market where sentiment changes, and we're here now. Down at 1760. I think if we lose this 1760 level, we're going to see even more selling, I think, for the price of gold, and the risk is it goes back sub $1,700 as the next target, back into the sort of April-June range. If we take a look at the RSI down here, I mean, if we wanted to use the RSI as a crutch for justifying a buy down here, whenever the RSI has gone oversold in recent months, I suppose, we have seen a bounce for gold from these levels. So the trade I want to do, I want to be a buyer. And I am going to go with a stop the other side of the most recent low. It was the low back in November, late November, down at 1763. It pushed through it by about $3 over the last week. So I'm just wondering, are we going to see finally some strength come back in for the gold price down here? But if we break below, I think I want to be long gone out of the trade. So what I'm going to do, I'll give the market about $20 of leeway. So I want to put a stop loss in at 1740 for this trade, and I'm going to be a buyer. So I'm assuming that the weakness we're seeing now, we are going to see buyers come back in ahead of that 1760 level. And then my initial target would be for a run back up to what are only the highs from the end of January, around 1875. Let's see how that works out. But like I say, I think if we break much below 1760, I'd have to throw the towel in on any bullish ideas from here. Let's set the trade up. So the market's currently about 1788 to buy. I'm going to buy 7.5 ounces. Where the market's trading now, put a stop loss in at 1740, so $20 below that most recent low, and it's for our usual risk of about £250. Let's place the trade. So our trades in, I normally don't like going against the trend, and I would argue that the bigger trend for the last couple of years and more is still up. The trend off the highs in August is down, but then the trend over the last couple of months or so is sideways. This is why I think it is a bit of a confusing one for me at the moment to put a trade on. We'll see how it works out. I quite like the contrarian aspect, the fact that lots of people are quite negative towards gold in the short to medium term. It's exactly the time when markets turn around. Let's see if 1760 holds. That's it for our update. We will see how things pan out. Does it get more interesting? Does it stay boring? Should we be buying physical gold? Should we just stick and go all in on paper gold? All of these questions and more. We'll see. We'll see how the next few weeks pan out. But for me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.